On the topic though of qualifying, I know you and I were
Hmm.
chatting about it before, and we really when people are coming up for renewal, and there's a huge portion of mortgage holders out there that are coming up for renewal, and there's I want to say I was reading the stats for the major banks that it's anywhere from 18 to like 26% of their book over the next 12 months is coming up for renewal, which is massive. And those people are going to be renewing or coming up for renewal into a lot higher rates. They're, thus far, it's been really hard for those people coming up to move to another institution. When you're
Or
For
to
those that aren't,
negotiate, you
yeah,
know.
like for those that aren't aware, is that just because you have a mortgage and you've been paying it on time, but you want to move it, let's say you're with, the big green bank and they offer you X renewal and you say, you know what, I'm going to shop it. So you go to a mortgage broker, they go and shop it to others. Well, you have to requalify for that mortgage, even though you've been paying it, but you're requalifying for it at today's rates, at the plus 2%, all of that, which, really a lot of people can't actually requalify for the same mortgage they have. And so what ends up, because they bought maybe at the max of what they qualified for 5 years ago, and even though they paid that mortgage off, the increase in rates, they just now do not qualify. And
Mhm.
so it limits their ability from a consumer availability, being able to go out and shop at other banks and have that. And so a lot of the banks know this as well. And so they're not being as aggressive on their renewal offers, which then again hurts the consumer and they kind of become stuck. And so what ends up happening is on renewal, you're not with that same bank. If your mortgage is with the big green bank, let's say, and they send you a renewal offer and you don't like it, you shop it. And there's other cheaper rates out there to save you money, but you do not qualify for them anymore because your mortgage, what you qualified on was maybe at 5.25%, at the bank at the qualifying rate 5 years ago, whereas now you're having to qualify at 8.5% if you want to switch banks. And that 3.5 difference, even though you paid down your mortgage, makes a substantial difference in qualifying. So you then are stuck having to just sign with your existing bank because they don't have to requalify you for that mortgage. It's like a loophole on that renewal that they don't have to qualify you, don't have to look at your income, don't have to do anything. Whereas if you want to move banks, they're re-looking at your income. So if you recently became self-employed or you recently changed jobs or, anything like that, or you're on disability, short-term or long-term disability for whatever reason, or someone's on mat leave or whatever it may be, that you can't qualify. You can't move banks. And so staying with that same bank, they don't look at that again. You can just renew, but it's not necessarily going to be at the best rate. And so it becomes a really big feedback loop and really challenging because it's not in the consumer's best interest. And then this article came out last week where an unknown rule within OSFI, which is the regulator overseeing the banks, had a rule in there buried that even the banks didn't know. And this came out last week that you could qualify if you had an insured mortgage and you qualified at the contract rate, how everyone's been handling transfers on insured and insurable mortgages is that you had to qualify at that rate plus 2%. Well, this article came out that hidden deep inside OSFI's rules that no one ever knew about and they never let anyone know about was that they could qualify you at that contract rate. It's a massive shock to the industry. I was on a call on Thursday even with an area manager from a major institution. They have over 150 billion in assets under management. They have 6 different lenders under their banner, and they didn't even know about it. It's really interesting that they had kept this from the banks and from consumers because it really is inhibiting consumers from getting a better deal.
Yeah, and important to note too that it's the insurer that doesn't require the new stress test, but lenders still can. So I think to your point, like lenders didn't even know that they had the option to not add that stress test. So even as agents, we'd be talking to clients and we're qualifying them at 8.5%. Like, well, fortunately on this has happened many times over the last 6 to 12 months where clients they just don't qualify to move, right? Like you said, either the rates are too high now and they don't qualify for the same mortgage that, or less of a mortgage than 5 years ago, but at the same time they're kind of pigeonholed with their lender where their lender might not be offering them any sort of competitive rate, but they're stuck there just because of the fact that they can't move. So it's very interesting. I think it's very good for consumers. It'll certainly, now that it's becoming more widely known, I definitely expect like lenders to step in and offer maybe deals and this sort of thing, like, you know, preferred rates for switches and so on. But I think also for agents and consumers, like as this becomes more widely known, people will maybe think more now to speak to a broker. I think a lot of people still, I was talking this with someone last week, of a real estate lawyer who's been doing it for some years. And we were just saying, you know, 10, 15 years ago, even going to when we started in brokering in 2013, it was still considered almost like a dark like industry, you know, like everything was paper based and brokers charge crazy fees and like you only go to a broker if you're desperate. You know, that was kind of the sentiment in the industry. Even working at the bank previously, that was kind of the perception of a mortgage broker. Now it's definitely, I think, more accepted, if not the standard, to speak to a broker before even speaking to your bank. And definitely to get pre-approved before shopping, that's standard. Like even when we started, that wasn't normal. Like you just go shopping and then, we better get a mortgage now. So I think people think now of brokers for purchasing. I don't think a lot of people think of brokers for transfers and switches, unfortunately. Obviously, we tell our clients, but the general public, I don't think when they have a mortgage coming up for renewal with the big green or big red or blue or whatever color you want to deal with, they don't know to even talk to a broker. They probably don't even think that's a possibility. So I think having this information out there and giving people the knowledge that they can actually not only talk to a broker, but that they don't have to requalify. Well, they do, but not with the stress test. I think will create a lot more conversations, which then, as we said before, is very good for the consumer, so they actually have choice in their renewal. They're not stuck with that same lender.
Thanks for tuning in, everyone. We hope you enjoyed today's episode. Please remember to like, share, comment, and subscribe because we'd really like that.